Okay, so this is yesterday's Tokyo session. Two trades, two winners. Let's get on to this. So I'm gonna share my screens. I'm gonna share my screens. I'm already looking at this. All right, cool. So here we go. Possible S&P 500 long two today. Now, I didn't record the first one, but that's okay, I guess. Now, first one was clearly, way manipulation of the. Um, so this is the Sydney range, manipulation of the Sydney range. So yeah, Sydney range manipulation. On which I took profits at the bottom of the previous range, right? So my idea was to take profits all the way at the New York session lows or yesterday's New York session lows right here. But and I was fine with this. Pretty nice move here on a flag manipulation above, then taking profits all the way down there. All right, so that was the first one. Now, the reason I'm looking at this is because of the setup on my second trade. I was flat at the moment. Well, I had this trade on. I'm not even going to look at that because I closed it at break even. Wasn't the best execution. I should journal it, but I'm gonna focus first on this cool long. So. Tokyo opens manipulating below yesterday's New York lows. So, yeah, I was looking to get involved long on a pullback. So I was already calculating my risk, which is great, because this is what we call in the industry a nice price failure candle, right? So let's move on. Let's see if we execute it here. I don't think we executed here. Whoa, 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 whoa. So no execution. So yeah, here. I patiently waited for that pullback. So to me, this what seems to be a flag here is untradeable at the high. I need a deep pullback for me to get involved long gold, more so because we did have this liquidation of the previous 15-minute candle closing below the previous 15-minute candle high. This is just a candlestick analysis. And this next 15-minute candle just fails to go higher. This shows me exhaustion in buying volume. Yeah, this is a no-go for me. People are going to get burned trying to trade the flag here and the retest of the previous 15-minute high lows or highs in this case. Let's see about this. I don't think I'm gonna trade that S&P 500. So my other screen. So there. Now, why am I looking at this level for a pullback? It's simple. It's just a Fibonacci retracement level. It's the 61.8. It's between the 50 and 61.8 here. It's just a fib and the previous high lows. This is the 5-minute chart. So I'm placing my buy limits there. I mean, I don't have a perfect a perfect pullback pullback methodology for entries. So I just used the fib. I just used the fib and a 1-minute structure, which I was looking on my other screen, which I didn't show here. Now, so that is, and you can see this trade at the bottom. My lean profits on the EM futures. I ended up closing this one at break here and just sucked. But this is my focus here on the S&P 500. So pullback, it's just a fib. It's just a fib. And I really don't care if bottom ticking this pullback because to me, frankly, it's almost impossible. But what I do care about is that my stop losses are on the right place. So as you can see here, all right. So again, stop losses are below the 15-minute candle lows, previous, below the price failure 15-minute candle lows. Very nice. This was a long trade. Hopefully I show here. The 1 minute chart. Here we go. That's the 1 minute chart. So here's that execution right there. So yeah, I mean, I really, really don't mind, you know, uh, um, pullbacks in my trade. The risk was already accepted in this trade, and this is where I put my entry. So this is the previous 15-minute base. So this is why I like about placing pullbacks on fibs that coincide with the previous base. So um, we have the down move on which I traded. Then we have that base that liquidated the lows and immediately created that V-shaped recovery. So normally I put my pullback entries right there at that level. And if it coincides with a fib, more power to the setup. So what I want to go here is I had zero emotions during this pullback. I was okay with it, even though I was risking, on my full risk on this trade. I have already made money here, and there you go. Whoop, 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 bump. So this is another thing that I want to discuss with myself because this is for me and me only. Yeah, we got that pullback, so very nice from the London lows. This is something that's okay, I guess. But then just have a look. I closed at break even here. The trade that I told you about, I closed it at break even, just before that manipulative move. Yeah, so this wasn't the best, but that's fine. Because I was full risk on this gold long. I couldn't execute this Japanese yen manipulation below the New York lows. We're gonna see what happened afterwards, which is okay, I guess. Now, look at this. Uh, Massive manipulation here. But well, I kept my trade alive because there was absolutely no new information that led me to uh, the decision to either close my trades and not even move my stop losses here because the structure was still very much immediately bearish right here. So the money line would have been here. So if I were to take money line trades on this pullback, would have been right around, I mean, should have been here. So very wide, in my opinion. Um, but yeah, this should have been the level to take money lines. Whatever. So good decision to hold on and to not give out on my trade. Now that price created this new structured low, money line comes towards this level, which is much better for an entry, to be honest. A 1 minute close, etc. So I was already in the trade full size, so I wasn't going to add or do anything at all. That's the money line. And there we have again some choppiness. So this is about 16 minutes of pure and utter chop. Now let's see. I was 5 contracts deep on this one. So here we go. The price moved to the upside, and money line. Yeah, I mean, horrible. So what I did here is I didn't wait for price to hit the structure highs. This was emotional decision to take, I mean, I was already going to take four there. That's fine. But, I moved my about 10 ticks, moved my limits, my sell limits about 10 ticks below just to get filled on that first target. So yeah, I didn't like that emotional uh, decision. And then I moved my stop losses to break even. Yeah, and that's it. I moved my stop losses to break even. And on the last contract, um, what I did here is I had no, I mean, I did have stop losses. I just moved my stop losses there, and they eventually got hit. So how I managed this last portion, I really liked it because there's possibility of getting a deep pullback from these levels, just to get rid of all. Yeah, I know, not get rid, but just to all right, let me stop the video right here. So I do like how I managed this trade, previous low. Price action was slowing down here, creating a wedge or so. So the possibility of a deep pullback was very real. So I do like how I managed that trade. Now, if you see here, now, so this is the 1 minute chart on that pullback. So this is where my entry was. My mouse died, so I'm using the pad. This is where my entry was. And money line, just have a look at this. My entry should have been here. So this is why, this is the main reason I don't like, using money lines uh, to trade pullbacks, right? It's not that I try to bottom tick them, but I'm okay with on a pullback trade, and I only trade pullback trades after a very strong candle or very strong, obvious manipulation, then distribution of price. So yeah, pretty much perfect trade and setup. Kudos to me, right?